So today we're going to talk about confirmation bias and how it affects our trading and investing decisions. As the simple steps to any sort of trading and investing decision is just taking the information that you receive, comparing it based off things that you believe are going to happen in the future, based on things that you have noticed in the past, and making a decision based off that. It's a very simple process when split up that way, right? I see this input, this catalyst. I know that historically this thing has happened when I've seen this. Therefore, there's a slight statistical edge that if I buy the stock or create an options position or short the stock or whatever it is, that that will be profitable in the future. That's the very basic understanding. So, why is it so hard for people? Confirmation bias is going to be a big part of it, which I will talk about. Because as we see that information filtering in, it doesn't just hit our mind, get perfectly mathematically calculated, and then output. Because of things like confirmation bias. So let's get into it here. So what is confirmation bias? I left out all the technical terms, but basically put, as we believe something, our minds will filter all information to align with that belief. So I'll come up with examples quickly later, but the biggest, most important thing to keep in mind is that our brain is receiving much more data than we know. Every time you do anything, there is a quick, rash decision based off past information. Our brains are basically back testing statistical machines, but not very good at it. So you'll see this thing happen. You'll try to recall all the times you saw that happen in the past, and then you'll make a decision. And what we'll go over is that all of those things that you've recalled in the past probably aren't an accurate representation of what has actually happened. So here's just a straight example. There's more political ones, but with what's going on in the States, I will leave it like this, right? So someone believes that women are bad drivers. That person will notice and record in his mind every time he sees a woman in an accident or driving poorly or whatever it is, and will filter out the times where he sees a man driving poorly or a woman driving well. Therefore, his mind is not accurately recording all information to make an unbiased, valid opinion. So, he thinks in his head, he's heard it from whoever, that women are just statistically worse drivers. So then every time he sees a female and it's stopped on the side of the road because of an accident or driving in front of him being erratic, it confirms this bias, and that's what his brain records because your brain wants to continue this bias on. So it's not like you're smart enough to write down in your mind, okay, this week I saw 2 women and 2 men in accidents, therefore that we should be about equal, right? So this is, regardless, let's ignore, statistical sizing and things like this, but your brain is basically backing you up. It's saying, okay, this is what you think. I'm going to filter the world by this, right? And this is where basic concepts like optimists and pessimists and these type of people come from, because they have some sort of worldview, and every time something happens, they're continuing on with that worldview. They're stacking that worldview on top of the last one, on top of the last one, and so on and so forth. So they're basically, this wave of momentum with their thoughts is carrying them in one direction. So what is the effect on trading and investing? So what is the actual effect and what are the problems? So both trading and investing are mathematical games that need to be approached as unemotionally as possible. If we taint our views with things we believe, we can miss out on great trades or enter tainted trades. So something, you think that something happens when XYZ happens, but that's just your brain recalling things incorrectly, right? So these are things that I hear a lot that don't make much sense to someone who's trying to eliminate this bias, right? XYZ hurt me in the past, therefore that stock is evil. The stocks are not evil. Stocks don't care about you, right? They either do a thing or they don't do a thing, right? If you have an actual setup that you have either back tested through some sort of statistical program, or that you've just back tested by watching the market, then you should know that that's a stock just like any other stock. If it meets that criteria, you should take that trade unemotionally, unattached, keep your wrist tight. If you've done your homework correctly, you'll have a statistical edge going forward, right? The other one is I only trade the long side or the short side because it's easier. And then I put your mind will hunt for long or short opportunities, ignoring good shorts. So basically, there's a saying out there that if all you have is a hammer, everything looks like a nail, right? So if in your mind you think that this side of the market or that side of the market's easier, you might look at a stock falling and wait for a bounce opportunity instead of maybe looking for a short continuation, right? Whereas if you look for a stock rising, you might look for a pullback to buy. So in both cases, you're just looking to buy stuff, right? And so your biased opinion about how the market works is cutting off a whole side of things for you. So this isn't so much detrimental, but it is missing out on a lot of things. So you can see that the more that we put our own worldview into this type of thing, kind of the worse off we are overall, because we're tooling things in our head, and our brain is very good at backing us up, right? So, if you believe the long side's the best side of the market, first thing, you're going to look for only long trades. So you're going to ignore all opportunities to short. And again, that stock falling, you'll look for a bounce instead of maybe looking for a pullback, that type of thing. So what else, right? What else harm does that do? Well, besides only looking at something from a certain side and only taking positions on that certain side, you're not exploring the other side, therefore you're just stacking that confirmation bias. So you're only looking from one side, therefore all of your data comes from one side. Therefore, if you're successful, it's just going to stack and stack and stack and stack. So you're confirming the bias of the confirmation bias, if that makes any sense. So how do we combat this, right? We all want to be as neutral trading as possible, right? That's the goal. I think we can all agree that that's a good way to go, is just to trade what we see, do what the market tells us, and take our little piece of the pie. So knowledge of any bias can help, right? If you knew, if I sat down with you with that women's driver example and I showed you statistical evidence, I don't even know what it is. I've never studied this, but if I showed you evidence that maybe men are worse drivers, right? If I showed you the evidence and I said, you have a bias to this, and here is why your bias is incorrect. That knowledge in and of itself can help, right? You can notice, you can say, okay, that's a woman driver, and then using the mindfulness that we talked about in a previous video, separate yourself and continue on. Same with, okay, I'm seeing this stock rise continuously. Instead of waiting for a pullback to buy because I only buy things, let's think about a short. Let's consider that. Just catching yourself doing something can be a world of difference. And then again, you guys know I love trade ideas. Link in description for the deal. It's a great backtesting software, and this will obviously have no bias. So if I say, okay, this is a setup that I think is going to work, I can then test it, and it will just tell me the raw data. Now, again, it's important for me to know about confirmation bias when I receive the raw data so that I don't try to taint things after it came out. But this is, a trade idea is as simple. I want to buy stocks when they do this. What would have happened over the last 3 months or whatever? And then I mentioned not only backtest your future trades, but backtest any ideas. If someone is very biased and they say a stock coming down to the 200-day moving average is a good buy. Okay, well, instead of just accepting that, right? Now is the time to test that before you come biased about it. Because if the person tells you this and you believe him, he's a good trader, then you just go on doing your own thing. You're going to build the bias. You're only going to notice the times that it comes to the 200-day moving average and you buy it and it works. You're going to ignore any times that you see it not happening, right? So again, back testing, going and taking that initially before the bias occurs and testing it and seeing if it's a good strategy can definitely help with that as well. And then I always put hypothesize and then test, and only after that act. So you don't hypothesize, create a bias, go search for something, and then after you've confirmed that bias, going out there. Like there's so many people out there you'll see on Twitter, on whatever, that they think something in their mind, so they'll go out to the internet and they'll find articles that only back up that fact, and then they'll push that fact on everyone else. That's annoying when it's in a social situation, but can actually cost you money when it's an investment situation. So before you do anything, do some form of back testing through Trade Ideas or another back testing software, or even just watching the market. But be aware that this bias exists and it can hurt you in the long run. So that is all for today, guys.